All right, guys, that's 5 days of data collection done. A lot of people can do that and they're fine with doing the data collection, but then they're not really sure what they should do with that data afterwards. So we're going to quickly show you now how to assess the performance of your setups. Just a point I want to make before we look into the data is that a lot of traders think that the problem is a stop loss. If they're struggling to make progress and they keep getting stopped out of trades, they think stop loss placement is the answer to all of their problems when it isn't. Remember, everything in the trading world is counterintuitive. The first initial thought you have is usually the complete opposite of what you actually need to do. So if you're having problems with a low success rate on your trades, first you need to look at your execution. Second, you need to look at your targeting. And third, you need to look at your stop loss. So all will become a bit more apparent as we go through the data. So I'll jump on the computer and we'll have a look. We're going to apply 3 different risk management profiles to the levels that we hit last week. First, Trader's Pathway strategy. We're covering the level with the stop loss and we're using areas of potential struggle, APS, to find our targets. So we're just using the first one. So we're basically reverse engineering the level strategy to find our exits. So you can see that the variation on the stop loss, obviously due to the sizes of the zones, and the variation on the targets, which give a varying risk reward for every trade. We're risking 1% per trade, which I think is it's a very high risk strategy. 1%. People seem to think it's the industry standard. It's not. It's a high risk strategy, 1% per trade. Also a high return. So if you need a high success rate. Anyway, more of that on a different video. You can see we had 7 levels hit on cable and 10 levels hit on pound New Zealand dollar. Now, as soon as price hit the level, we're just then recording the amount of drawdown that the level did. So say this is your level here, for example, and in the green box, if you record that drawdown of 29 pips. So in our 3 different risk profiles that we use, it's going to be a loss in pound New Zealand on the Trader's Pathway strategy, because this is the one actually, number 8, because we only had a 13 pip stop loss to cover the zone. On the 30 pip stop loss with a 30 pip target, 1-to-1 risk reward ratio, it was a win because it did 29 pips drawdown and then went on to hit 30 pips. And on the 2-to-1 strategy that we used, it was also a loss because it did more than 20 pips drawdown, of course. So you can pick your own risk reward strategy. You can have a 10 pip stop loss and a 60 pip target if you like. You can apply a myriad of different approaches to the market to see how your strategy performs in different with different size stop losses, different targets. And you'll see that a lot of these losses on pound New Zealand dollar were due to price actually doing 20 to 30 pips profit, not getting to the 40, and then turning and hitting the stop loss. So collecting the data is important because it shows you the success rate of your entries, and the success rate isn't defined by the trade hitting a target of X number of pips that you've selected. So this is why traders can have a lot of issues, because if your target is always a specific amount of pips, yet it's not getting there all the time, you need to assess your levels. So in the levels tracker, there's a column that you note down the maximum updraw each level does. So you might find that most of your levels are doing 13, 14 pips at least. So you could have a really high success rate, but because you're trying to target further without considering the charts, your success rate is a lot lower. So you can't judge your success rate based on what you select as a target. You see that it's not compatible because you're using technical analysis to get into the market, but blind faith to get out of the market. You can't assess the data on that. So if you use a strategy to get out of the market, you can assess the performance of that, because if you're missing that all the time, Well, in fact, you won't. The evidence is there. Like, that's why I trade this way, the way I do. If you're getting into a trade, it's likely that when price gets to an area of resistance or support, it's going to bounce, because the figures, the stats tell us that. So don't have a fixed number for your target, and don't have a fixed risk reward. You've got to just, if your strategy is good, price will react to your zones. So why do you need a 30 pip stop loss when the zone might only be, for example, 9 pips or even 2 pips there? So by playing too safe, you're drastically reducing your risk reward on your trades, drastically reducing the profit. So if we look at Pound New Zealand Traders Pathway strategy, precision levels method, 90% win rate, 20.8% profit. 1-to-1, 80%, so not too much difference in the win rate, but the profit drops well off, all because you've got that 30 pip buffer zone as a stop loss. You can have losses, it don't matter. Your strategy needs to be able to work for you. And as soon as you open up to the 1-to-2, your win rate drops off loads because the target is further, price just isn't getting there. But it's still making a decent return. But market conditions last week were perfect, and the week before, since the tariff war has sort of quietened down a little bit. The problems will arise when you're trading with these stats, but you're taking more losses because market flows are happening. Now, this has got a buffer zone to take some more losses. So you can see why a lot of traders are boom and bust, because they do very well, but then as soon as market conditions change and risk picks up, they don't have the knowledge to avoid trades in a risk flow scenario. So they keep taking the trades, and then they just get hit massively with the losses because the success rate isn't there. It drops off. You can see cable, same success rate on the 1-to-1 and the Traders Pathway method, but again, the profit is night and day. It's still profit, but these are very favourable market conditions last week. So that's it. If you've got any questions or you want me to cover anything else, drop a comment. If you want to join the channel, link in the profile as well for the Discord. And I'll catch you later. Cheers, guys.